The US dollar traded sharply lower today after the abysmal manufacturing ISM number. It fell against all of the major currencies except for one, which is the Canadian dollar. The Canadian dollar underperformed the greenback ahead of the Bank of Canada's monetary policy announcement. It dropped to 5-month lows because investors and traders are expecting dovishness from the central bank. Many central banks around the world are talking about easier monetary policy, and as the initial signs of weakness begin to show in Canada, with retail sales falling short of expectations and declining from the previous month, investors think that the Bank of Canada could very well lower interest rates before the end of the year. Some people are looking for a rate cut in October, others in December, but either way, the futures market is telling us that investors are pricing in a 70% chance of a quarter-point cut from the BOC. So the BOC rate decision that we have on Wednesday is going to be very important because the Canadian dollar is trading at 5-month lows and underperforming everything, including the greenback. So if the Bank of Canada recognizes the deterioration that we've seen in spending, we could easily see dollar CAD break out of its range. It's been consolidating for weeks now and trade towards 135. Now, the Bank of Canada doesn't necessarily feel the pressure to lower interest rates because while consumer spending numbers haven't been great, inflation is pretty much around their target levels. The trade balance is relatively decent and manufacturing activity has been healthy. Overall, the Canadian labor market numbers have bested a lot of the labor market reports from around the world and is providing the underlying strength for the economy as a whole. So if the BOC wanted to remain on hold, maintain a neutral stance, and indicate that they just want to wait and see how things progress before talking about easing, we could also see dollar CAD break out of its range, but this time to the downside, with dollar CAD potentially trading below 132. So this week's Bank of Canada rate decision is very important because the market will be eyeing guidance, especially since there is a faction of investors who think that the BOC is going to cut interest rates in October. So the next 24 hours is going to be critical for the loonie. This week in general is very important for US dollar, the Canadian dollar cross. And the reason for that is because aside from the Bank of Canada rate decision, on Friday we have employment reports from both the US and Canada. So regardless, dollar CAD has been trapped in a relatively tight range, and if there's a week for a breakout, this would be it.